And I want to talk about cryptocurrencies and Ponzi schemes. So let's see how many people join here. Feel free to ask any questions, to do any comments. Try to directly talk about this then. But yeah, before we have people here, I want to discuss something where I sometimes get these comments on videos where I'm somewhat critical of, say, a certain DeFi project or a certain cryptocurrency, and where I might even call this a Ponzi scheme, and where I then get comments such as, "Isn't everything a Ponzi scheme? Isn't the whole fiat system a Ponzi scheme? How is this DeFi project more of a Ponzi scheme than Bitcoin itself?" So there seems to be somewhat the lines of what is a Ponzi scheme and what's not a Ponzi scheme seem to be somewhat blurry. It's pretty hard to find a clear-cut definition of this. And so what I find interesting about this is we really have to look at the mechanisms of what really a Ponzi scheme constitutes. And from my perspective, this is the regular cash flow. And that's the regular cash flow uh, from new people entering the space, hoping for a positive return, to existing people. So when you just say, when you've got Bitcoin, right, you buy in and you buy low, you sell high. The idea behind this is then that still you kind of make money because other people came after you. So indirectly there is some kind of a value transfer from the new people to the old investors, right? So there's this kind of idea of the greater fool's theory. But the difference to a regular Ponzi scheme, in my perspective, is that there's no real regular cash flow. So let's say person A gets into the system, then person B follows, person B pushes up the price in Bitcoin. But in a Ponzi scheme, you would have regular transfers of capital from person B to person A, meaning when nobody else is coming into the system, right? After a certain period of time, all the money from person B will be transferred to person A. That's different though for Bitcoin, right? If person A buys, person B buys as well, nobody does anything, then just both people kind of keep their capital and whoever pulls out first is the winner. Right, so that's different to Ponzi schemes where you've got this regular cash flow system. And that's, I think, where the real distinction comes. And this is kind of like also what makes Ponzi schemes so dangerous, because there's way less people that benefit from all of this. I just saw a comment. So where am I currently? I'm not in Hong Kong. I'm for the summer holidays here in Germany right now. Yeah, enjoying the nice weather, obviously, and it's a bit of a time to relax a little bit and to try new concepts, right? Try the live stream over here. I've also now doing quite a few talking head videos similar to this one. So just to kind of ramble on and talk about experiences and trying to connect more with the existing audience, basically, right? Nobody's currently searching for cryptocurrencies that much anymore. The whole attention on the crypto space is down. So yeah, it's time to kind of like figure new things out. That's the idea. And yeah, Germany is nice for that. Um, yeah. Now with Bitcoin, right, and with Ponzi schemes. So let's talk back again around this. Um, what's important to note is that a lot of these games, they are somewhat zero sum, right? Because um, in a way, there's no real utility that's being created. Okay, of course, with Bitcoin, you could say, okay, you can store your value, you can transfer it across borders, etc. You can't confiscate it. So there is some kind of utility in there, but with a lot of DeFi projects, it's kind of like zero sum. So some people get into the system, money flows within the system somehow, and then there are a few winners that take away the money, the capital basically, from other people entering. So it's kind of like, so I have this background of online poker. I played online poker for quite a while. It's kind of like that in a different way. So you've got these um, the transfer from the not so skilled people to the skilled people. And DeFi is, in those Ponzi schemes, DeFi is pretty much that kind of a game. That being said, not everything that's zero sum has to be also zero utility, right? So when we look, for example, at insurance, insurance is also kind of like a negative sum game, right? What is really, what value physically is insurance providing, right? You give them their money, some other people are giving them money, they even take a cut from this, they make a profit, the insurance company. And in the end, your expected value of what you get paid out is lower than what you pay in premiums. But the utility of insurance is basically that it allows you to take more risk, right? So let's say you wouldn't do a certain activity without the insurance. Now you would do this, so your real life behavior might change because you now have this insurance. And that's kind of like the utility, right? Even though the money is not really providing anything material, it's just flowing from one person to the next. Nobody is really doing anything outside of this. If you've got something set up that the incentive structures help change behavior, help give some kind of a benefit to people, then still, even if nobody produces anything, it can still be utility positive. Yeah, so I was actually thinking about this a little bit. So I was wondering if for this transfer mechanism, right, that we see in DeFi for rebase tokens or for whatever else it is, I'm wondering if it really makes sense actually to use the word Ponzi that much. Because the issue is that there is kind of like a judgment around this, right? So people say, okay, Ponzi schemes are not legitimate. Ponzi schemes don't last very long. You shouldn't invest in Ponzi schemes. And the way I see this word, or the way I use this word, is rather in a descriptive manner, as in to point out the tokenomics aspect of something, right? When I talk about a Ponzi scheme, I rather want to talk about the nature of money flowing from new investors actively to the old investors. That's what I want to describe when I use the word Ponzi. But most people rather tend to understand it as a blanket judgmental thing, right? Don't get into this, this is a Ponzi. But what I think is, if you're actually aware of what's going on, then using this knowledge can be beneficial. So I don't really have a, I don't really judge people that knowingly get into Ponzi's. Right? If you say, okay, I've analyzed all the data and I see this thing is still growing and there's a lot of marketing behind it, and this is just a player versus player game, we both bet our money on this, and then just one person that understands it a little bit better pulls out the money, whereas the person that didn't put in the time to understand it all loses it. It's kind of like fair game. Then I think it's fair enough, right? Why not get into this? What I find problematic is when it's being marketed in a way that people get into the system without actually knowing what they sign up for. So that's in the end, I think, what needs to be said about this. Let me quickly check the chats where I can get this here. This is the very first time I do this. So let me see what I can get from here. Smash the like button. Yes, of course, that would be appreciated. Yeah, it's not the UK, it's Germany. This is where I'm originally from. Keep up the good work, mate. Keep doing what you're doing. If people don't like your honest opinions, don't worry, let them go watch other YouTube videos and tell them what they want to hear. Yeah, this is kind of like the idea of the channel, right? So I try to be as objective as possible with the analysis I do. Of course, the opinions or the results that come from all of this can be wrong as well. But this is kind of like the incentive issue within crypto. I actually have another video that I've recorded yesterday that will be published today around a YouTuber incentive structure. It is hard to be completely objective in this space, even if you don't take any sponsorships, right? So that's the obvious thing. A lot of people just take money from random projects that want to do marketing, and they might not even disclose this. And the money that flows there can be very, very large. So actually, when you dive into the blockchain data and you look at what some of these influencers get, like there's people that have only, say, 5 times my audience. They make a single video on a pretty small crypto project, a Ponzi-like crypto project. They get 10,000 US for a single video, and then they obviously do several videos per month. And yeah, saying no to that money is obviously not that easy. But even if you don't do this, right, I never took any money from any project, even though I get approached several times a day for these sponsorships. Even though I don't do this, it's still hard to stay objective because of 2 reasons, basically. The first one is the algorithm. So YouTube tries to push whatever is currently popular, but what's currently popular is maybe not necessarily the thing that's the best investment, right? You should actually be, most of the time, contrarian. You should buy what's currently not fashionable and sell once it is fashionable. But YouTube exposes or gives exposure to content that's currently being searched for. So that's one problem, right? The second problem is obviously also the comments, right? When you try to be completely objective, what I also feel, what tends to happen is, in order to avoid some of the critical voices, I start talking like a politician sometimes. So as in like, yeah, I wouldn't invest in this. If you might think it's a great idea, go ahead. There are several ways to do this. And then in the premium membership, right, these 100 people that are in there, I just talk to them completely frank, as in like, yeah, don't do this. It's a waste of money and resources, and I can be completely frank. And if people unsubscribe, well, then they unsubscribe. It's okay, but I won't get so hostile comments. And it's funny, right? If you've never done any YouTube, if you suddenly do it the first time, you do care about the feedback in a way. And there is this cute effect where you get like 10 positive comments and like 1 negative one, and you're just thinking about the negative one all the time. And it's probably part of human psychology, and after a while you kind of get used to it to a certain degree, but still you also obviously want to improve over time. You want to get better, so you want to hear the negative voices. And I can imagine that consciously or subconsciously, a lot of YouTubers that get into the space, they tend to morph over time into those moon boys, into those people that push all these random projects. Maybe not because they're financially incentivized all the time, but often they are. But maybe simply to avoid all the heat that comes from it. But yeah, I try to just withstand that to a certain degree. I kind of consciously try to stay objective, even though I also do get my fair share of this didn't age well comments. But at least it's like, it's the result I came to at a particular point in time of how I see something, as objective as I can. Okay, let me check the next comments here. Yeah, keep the comments flowing, right? I try to get into this as much as possible. Yeah, so have you seen the Litecoin chart recently? Got any thoughts on Mimble, Wimble, Lightverse, etc.? Nah, I haven't looked at it much. I know that like a few months back there was like this huge push for Litecoin, right? There was like some kind of false news where within 24 hours or so we had like a 200% spike versus Bitcoin. Then this reversed, and but I don't know recently. The problem, so the reason why I'm not that interested in Litecoin is the long-term underperformance. So I personally like to go with the trend and like to go, especially for altcoin speculation, I like to look at the few weeks momentum, and I want to see outperformance over the long term, but also over the medium term, as in a few weeks. If I see a long-term underperformance, maybe because of token inflation or other factors, whatever it is, I tend to stay away, because with an altcoin itself, you already get more risk than just by buying Bitcoin or any other very large altcoin. But Bitcoin should basically, Bitcoin, or at least total three, right? Cryptocurrencies, altcoin market cap. It should be the gauge, the minimum return that you should expect from your investment, because it's kind of like the most risk off of the bunch, right? It's the same when investing into individual stocks, by the way. So I personally, when I buy stocks, I don't look at the stock in terms of US dollars. I look at it in terms of relative performance to the benchmark index. So when you're buying Facebook, for example, don't look at the Facebook US dollar price. Look at Facebook divided by the NASDAQ 100 index. Or when you buy Apple or when you buy Google, right? Look at the relative benchmark. And when you buy something more conservative, right? I don't know, Coca-Cola, then compare this to the S&P 500. Don't buy a stock because of the US dollar valuation, because when you buy a stock, you always invite idiosyncratic risk. So in financial, okay, so I'm jumping a little bit, but this is a live stream, right? No problem. So in financial theory, there's something called idiosyncratic and systematic risk. And a systematic risk is just the risk of the whole system, that everything implodes. It's basically what you see with the index going up and down. Idiosyncratic risk is the risk that you have by holding an individual company. So usually the volatility, the price movements of an individual stock is higher than the one of the overall diversified index. And you thus take more risk by holding something individually than holding the entire index. Thus, your minimum requirement for holding an individual stock, in my opinion, should be that you outperform the index. And if it doesn't, right, if it doesn't outperform, or if it doesn't at least risk adjusted outperform, so maybe the volatility is lower, thus you accept lower return, but if risk adjusted it doesn't outperform, then why take on the idiosyncratic risk when you can get the systematic return with the systematic risk without the, on top of that, the specific risk to that asset? And the same for me goes true for crypto. When you buy an altcoin, your benchmark is Bitcoin, in my opinion, or at least all of the altcoins, as in measured in total three. And if the altcoin didn't do this in the past, in the last 4, 5, 6 years, where you had obviously more risk than with Bitcoin, then why even bother and put in too much mental energy in it? That's how I personally approach this. So yeah, there was a long-winded answer, but yes, that's kind of like why I'm not that close into the recent Litecoin development. Am I Jewish? No, I'm not Jewish. I'm Christian. Did you hear of VOW? No. What about XRP? Yeah, XRP has the same problem as Litecoin, even worse, unfortunately. There's obviously the big bet on the lawsuit that seems to not go too well for the SEC, by the way. They seem to kind of try to drag the whole process. So XRP has this sort of Damocles above it. But the main problem is also probably fundamentally, in my opinion, is token inflation. By the way, right, when you hear me talking so much negativity around altcoins or around many altcoins, it is because most altcoins, they do underperform Bitcoin. And that's to be expected. It's the same with stocks. Most stocks underperform the index. So it's only like, I don't know, I don't have these statistics, but it's maybe 10 to maximum 20% of stocks that underperform the index and of altcoins that outperform Bitcoin. So the minority outperforms, the majority underperforms, and the few that outperform massively, right? So they don't outperform just by a few percentage points, they outperform by multiple X's. That's why you have this skew, you have this winner take most dynamic. Thus, the likelihood when you're posting just an altcoin here that I'm going to say something negative about it is high because most altcoins underperform. And the underlying reason for this is also clear, right? In technology plays, you've often got these network effects, and most resources then go to the platforms where network already exist. And so new entrants have a hard time, right? That's why Facebook can be the leading social network for such a long time. What will be your opinion on Celsius? Do you think it should collapse? Yeah, I haven't. So I've obviously followed the general news, but I don't have any more knowledge around Celsius than you do. Things are obviously a bit tough around this. There was also the rumors around support. I think it was by Goldman for raising funds for Celsius. I've also watched the video. That's a pretty interesting video by CoffeeZilla on Celsius. Describing how much risk they might have potentially taken. So from the outside in, the way I approach these situations usually, right? What makes most sense most of the time, and this is a bit of a problem for crypto and for finance in general, but the way I normally approach this is when there are rumors around something, I instantly go out. Which is the best for me personally, as in I'm not part of the collapse anymore, right? There was already rumors around Luna collapsing way before it did. And then once this little depack happened, then I also made a video like, get out. And that sometimes means you do take a slight loss, right? For example, there was the magic internet money, depack, and then you're suddenly, you're selling for 95 cents on the dollar, and it's not necessarily always the best thing. But usually when there's a rumor, it can, justified or not, get into a flywheel effect where things get worse and worse over time. And you don't want to be in the asset when, in case that happens. It doesn't have to happen, but there is a likelihood that it happens. Now the problem with my personal behavior in those situations is that me exiting when there is a rumor creates a situation where there is a self-fulfilling prophecy, right? And people think it will collapse, people withdraw, which actually causes the collapse, at least to a certain degree. So it's maybe not necessarily the best for the overall space, but in the end we're all looking out for ourselves, right? So whenever there is something where people send out warnings, I always approach this in a way that I say I get off first, right? I exit first, and I don't want to know if it's right or not. I just want to preserve my capital, and that's the most important thing to do. Yeah. What exchange do you trade on? I personally like to mainly use decentralized services. So I don't like to use Binance and FTX, etc. These would be probably the centralized ones I would use. I simply prefer to use DEXs. So I have my crypto money. I put my fiat into crypto via over-the-counter dealers, and I also withdraw in that way. And I try to be as much off those KYC platforms as possible, mainly because of regulatory risk. So in Germany that wouldn't probably be a big of a deal, but most of the year I live in Hong Kong, and so it's unclear how the Hong Kong regulatory environment is going to change over the years. China has a very, very problematic stance on crypto, in my opinion. So there is a lot of bans, there's a lot of issues around this. Hong Kong is not yet there, but in case it gets there, I don't want to be in the limelight, and I want to be able to exit the country quickly, and go to a place where you're treated better, right? Go to wherever the regulatory environment is best. That's my approach. Okay, got it. Ask about Litecoin because of the fundamental changes, privacy update, Liteverse, NFT platform. Check out Litecoin versus Bitcoin weekly. Thanks for answering. Yeah, okay. Yeah, I will have a look at Litecoin again. Why not? I mean, if it gets requested like this. Regarding NFTs, though, just again a general ramble, right? I'd be cautious with NFTs as long as it's not very well established, because you also have the liquidity issue, right? If something gets out of favor, it literally goes to zero because you can't find any buyers. If you buy a Bored Ape, that's obviously a bit different. But yeah, when you've then got NFT platforms even on different layer ones, then the likelihood of getting completely illiquid on your NFT even increases. So yeah. Where do you live in Germany? Yeah, I don't live in Germany. I'm just here for holidays. I'm currently around a lake called Möhnesee. So that's where my parents have their little house. And yeah, hello also to you, Eduard. Thanks for commenting. So yeah, that's kind of like the idea, right? So this whole video is around Ponzi schemes and zero sum and all of that. And the way I approach crypto, and I think the way everybody should approach a lot of financial markets, is you can either try to be close to the best, to as the top 10% or so of investors. Then you have to really put in the time, the research, and then this idea of do your own research is really true, because just watching a single YouTube video is not going to give you the edge to be in the top 10%, right? You have to learn the analytics, you have to maybe know about the founder team, you have to have some kind of information edge. That's one way to play it. And then most people obviously will not make money with this because they simply don't invest the time and the resources and the mental energy. The second approach, and this is I think what's the right thing to do for most people, is to be rather cautious and to just dollar cost average in and out of Bitcoin, to have a portfolio that's diversified across different asset classes. And when one asset class, such as crypto, is low, then you want to be DCAing heavily in. You want to shift from, say, your tech stocks to your crypto. And when it goes up again, you want to do the other way. So you want to have some kind of target allocation for each asset class, for property, for crypto, for stocks. You want to have some kind of, according to your risk tolerance, a balance that you feel comfortable with, given the volatility, and then act accordingly. So you don't really try to anticipate that much where is it going. You're just trying to react to where it went. Okay, so that's for most people the best. What's important is if you try the route of beating the market, of being in the top 10%, then you have to take the time to do this, right? It's very unlikely, at least I don't know anybody, that can beat the market across several asset classes. So it's unlikely you will find the underpriced house in your area, and you will also find the underpriced cryptocurrency recently, and at the same time you will pick the best stocks. So choose the market that you feel most comfortable in, or that you have most fun analyzing, and try to build your edge there. Try to be the top 10% there. And for the other markets, just try to go with the benchmark. Try to hit the benchmark, buy the stock ETF, a Vanguard low cost ETF, or try to buy a property that's super straightforward, where the pricing is super transparent and where it's easy, where you know you can sell it for relatively usual prices. So that's probably what I would do, right? I would not try to build a great house when you've never done this before and try to beat the market this way. And then try to be the best in all of the places, because that's pretty hard. It's probably the best to be focusing on one market and that's then how you can outperform. That's where you can get the alpha. Okay, continuing with the comments. Taiwan is much more fun than Hong Kong or Singapore, at least safer. Yeah, I'm considering now Malaysia, so I am going to have a week in Malaysia after this Germany trip. Taiwan might be more fun than Hong Kong, but you've also got now the political risk there, so I don't want to necessarily relocate there just to then fly again. So yeah, here we now hearing the fighter jets already. Let's see if I can get this on camera. So yeah, the loud background noise you might be hearing, these are test flights, training flights for the Ukraine conflict. So directly on topic. So I don't want to see something similar in Taiwan. That's why I'm not moving there. Singapore is nice but expensive. Malaysia has nice international schools. That's why I'm considering those. So let's see. Maybe I go to Malaysia. But yeah, first have a 1 week trip and see how it is. If Bitcoin is just another currency, why not simply Forex trade and benefit from a less risky sector regulation and more predictable volatility? So FX trade is a different beast. So okay, I've done actually these. So in case you're following this channel already for a while, it's likely that you have seen a back test of certain technical indicators. Right, so for example, the relative strength index or the moving averages, I've back tested those. And I'm trying to come up with trading strategies that tend to outperform the market. And then I also incorporate the typical trading fees in those back tests. And what's interesting around Forex is that these quant approaches work really, really bad for Forex. So Forex is pretty much a random walk. You can't really predict anything based on past performance, at least with the simple approaches that I take. I'm not like the math super quant wizard that some people and some hedge funds might have. So I can't beat Forex. And for stocks, it's also very, very tough to do. For maybe some small cap stocks, possible. But if you try to do moving average trades on the stock index, you also don't get outperformance. That's different for crypto. Crypto is still so inefficient, relatively speaking, that you can trade the momentum just with technical indicators, and that's what I tend to do. At least when I try to time this short term, the short to medium term momentum. Forex trade is super, super advanced, and I think that you can only really, that 99%, not just 90, but 99% of people will lose money, especially if they don't have access to the low fee structures and to the cheap leverage that the professionals have. So if you just go on an FX trading platform, you might as well just throw your money away. I would completely stay out of this. And if you're currently following a YouTuber that promotes FX trading via affiliate link, then I can't recommend it, but it would probably be in your best interest to unsubscribe from those, because those people are unlikely having your best interest at their heart, or at least they don't really know what they're doing. I have a pretty strong opinion on this. So I would not. Bitcoin and FX as in traditional currency markets is very different. They trade very, very differently. And the sophistication of people in the space is completely different. So yeah, stay away from FX. That would be the quick summary. Yeah, morning, Gerd. Life's good in sunny Germany. Yeah, that's true. Why so Abercrombie? Yeah, so I just simplify my life a little bit. So the Abercrombie stuff, it fits just well, and I just bought a bunch of it and I just wear it. Why Asia? Yeah, I like Asia. I like Asia in general, the lifestyle in Asia. There's a lot to say about Asia in general. It's probably worth an entire different podcast, but maybe not everybody that's the audience here would be that interested in it. But a lot of things are very different, right? You outsource a lot of things because the wealth gap between rich and poor in most Asian countries is very large. So you usually don't have to do any kind of housework because you have a domestic helper that helps you with everything. You usually have pretty high population density in the large cities, so you can get everything very quickly, very cheaply. You also have your downsides, right? Things are louder, noisier, maybe more polluted. It's a bit more stressful to a certain degree. Taxes are normally better in Asia when you earn a lot, meaning you also have little support when things are not so great for you from the state. So yeah, there's a lot of different things to say about Asia, but in general, for me personally, Asia works better than the West. So I will not move to any Western country anytime soon, except maybe Dubai, if you can call Dubai Western. I've heard a lot of things that are positive around Dubai. So yeah, I might visit this. I've never been to Dubai. I've been in quite a few places, but not yet in Dubai. Crazy how obvious gold and silver are being manipulated in these times where they would traditionally be a safe haven. Love your work. Yeah, so gold is interesting. So gold in US dollar terms has not appreciated this year. It's pretty much at the same price as beginning of the year, which is surprising. Now there was this narrative around gold being a weak performer because a lot of the new money, the young money, went into Bitcoin instead for a similar purpose. Now, I'm not sure actually if that's really the case, if the purpose is wealth preservation for most Bitcoin investors. Most people just buy it for the long-term appreciation, right? Most people still see it as a risk-on asset, which is fair enough, right? The volatility is massive. We are now down 70% or so from the all-time high. Gold is different, right? Gold's volatility is way lower. Around manipulation, yeah, I have heard, especially from a lot of silver people, that there seems to be quite a bit of manipulation. For gold, you also have quite a bit. I'm not too deep in the gold market, but there seems to be some gold price setting by the banks that trade this. So I would also not be surprised if that market is manipulated. There's probably not too much liquid trading happening all the time versus the overall market cap, meaning with quite little money, you can probably move quite a lot of market cap. So it would make simply just sense when there's little liquidity compared to market cap to manipulate. So yeah, I am not yet a fan of gold. There is a video on the channel around this. You can actually do this by yourself. I made a specific gold chart that compares the gold performance relative to the S&P 500. So when you go to tradingview.com, you can simply enter this in the ticker. So you can enter gold divided by SPX, so /, and then you can look at the, say, the weekly or better monthly chart. Then you get, a 100-year chart that shows the relative performance of gold to stocks. And you can really see these long-term cycles, and they are massive. They're really, really massive. So from top where gold was really, really high to where it was really, really low, you had like a crash in relative performance of like 97% or so. So there are cycles where gold actually outperforms stocks pretty significantly and vice versa. So it's not obvious that stocks always outperform gold, even if you look at like 10, 15, 20-year periods. There are periods where gold outperformed that massively, mainly after Bretton Woods, right? After leaving the gold standard and you didn't have the convertibility anymore of US dollars to gold. That's when people went crazy in buying gold because they saw the debasement of the fiat. That was then the big narrative, and that's probably what the narratives are in the end really what drive the prices, in my opinion. I think finance is less mechanical as most people think it is. Most people think it's super straightforward, as in interest rates rise, cash flows have to be discounted more, costs of companies go up, thus prices of stocks go down. And even though this in theory all makes sense, prices go down because people sell stocks. And prices go up because people buy stocks. So even though in theory this is all right, if you actually look at this, right? If you look at the correlation of interest rate changes, forward-looking or backward-looking, versus stock prices, the, the correlation is not that high at all. So when people tell these narratives, or when people tell these stories, oh, the stock market went down because interest rates got hiked, to a certain degree this is true, as in very short term there are traders that actually trade this. So when there is a hike that's above expectation, then the stock market will crash by like 1 or 2%. But right, that's like one day out of 365 in a year. It doesn't really move the overall momentum that much. So it's one of many influencers. The main influence is always, where are most people going to? Do they have disposable income to speculate with? Yeah, so that's that on that. Gerhard dropping a new video without investigating optimum moving averages is the bottom. So so yeah, I have so the main thing I'm currently looking at is the best moving averages for total 3 and for Bitcoin. For total 3 we are relatively close to those moving averages. For Bitcoin, one of the best moving averages, simple, is the 45-day. So just look at the 45-day simple moving average. Before we are above that for Bitcoin, we are at least not 100% bullish yet. So be careful out there. I relocated to Latin America. I'm from the UK. Yeah. Cheers. Greetings to there. Would you recommend people to get physical precious metals? Yeah, so for wealth preservation, right, if you're looking at like the next generation, when you buy this for like your children, then yes. If you just do this for like 5-10 year periods to preserve your wealth, so you might as well have it just in cash or have your diversified portfolio. The problem is the long-term expected return of precious metals isn't high. As a diversifier might make sense, the correlation to other assets is very low. That is the big advantage of precious metals. Crypto doesn't have that. Crypto still has even an increasing correlation over time with stocks. So this is the big advantage. If you buy precious metals, then yes, the physical form likely will make most sense, because you're basically trying to buy an insurance against the absolute super collapse, right? So yes, if you do this diversification, I had a bit of gold, sold it all after I saw this long-term chart. If you do decide to get in, then yeah, buy it physically, but be aware your spread, your bid-ask spread, your costs, and your running costs also of insurance, etc. It might even outpace your expected return. If you expect only 2 or 3% per annum return, but you already have a spread of 2 or 3% buying and selling precious metals, then yeah, just be aware of this, right? You will not get rich from this. This is really just a small diversifier if you want to do this. But it's not, in my opinion, it's not a necessity. I personally don't have it, but you know, situation might change, right? If there's more fighter planes flying here, then the situation might quickly change. Yeah, we have a housekeeper, also cooks and cleans. Yeah, it's really nice. It opens up so much free time to do things you really enjoy. If you don't enjoy cleaning and cooking, then having this outsourced is really a relief. I spent a year in Thailand, can recommend if you can take the heat. Yes, Thailand is nice. The problem is international schools. They do have a few international schools. The Singaporean seems to be okay. There's Harrow. They are fine, but most schools aren't that great. You're a bit limited in your choice there. So yeah, that's the main reason against Thailand. If you've got a family, if you've got children that need to go to good schools, Thailand might not be necessarily optimal in my opinion. I think Malaysia is superior in that regard. And the price levels of Thailand and Malaysia isn't that different. It's relatively comparable if you at least compare the major cities. They also found a lot of gold in Uganda. Yeah, that's always the problem, right? The supply issue that you don't have with Bitcoin. That was one of the main selling points. Gold rallied in the 2000s. Yes, this was basically the narrative around that was the dot-com boost, bubble pop, and the question of how can we protect ourselves from that. But the rally in relative terms wasn't even that massive. I think versus stocks it was a 3 or 4x. And that happened after a collapse of, like, as said, 97% or so versus stocks. So it wasn't really worth, like, if you didn't perfectly time this, then you didn't really have that much of a gain from the gold rally. And yeah, it works over longer cycles, that's correct. But longer cycles is really something different for gold, right? We are really talking about generational cycles, as in 20, 30, 40 years. When you look at the chart, you will see that. Maybe I publish that video soon. Again, I republish this. Or maybe just search for gold. You probably even find it. Search for gold on the channel. You'll find that video with the long-term chart. So yeah, that's then long-term, right? When we talk long-term in Bitcoin, we're talking 3 or 4 years. When you talk in gold, you talk 30, 40 years. So you're talking about yourself when you're old or the next generation. If the Ugandan gold deposit discovery is true, then that's a future game changer for gold in terms of supply. Appreciate your channel. Enjoy your holidays. Thanks. Any Asian country in particular you're considering? I'm very partial to Japan, although their economy at present is on the ropes. Japan has had economic problems since I'm alive, I think. The main problem is it's a very isolated country. There's not a lot of people coming into the country, and it's also culturally very isolated. Not everybody knows English that well. It is very well developed. It's as clean as Germany, etc. But because it's so isolated, they also cannot solve their problem with having enough people entering the workforce. Right, the birth rate is really, really low, and so the population is aging. And when there's no new people coming from the outside, then of course the economy is having issues, and so all the asset prices, property, etc. Aren't that great either. So for me, Japan personally isn't that great of a deal. It's not as inclusive of a country as you might hope, and with English you're not necessarily coming across area. You have to definitely learn Japanese to be really inside the Japanese society, and even then, just by your outlook culturally, you're always going to be the outsider. You could have lived 20, 30 years in Japan. That's at least what I hear from people that have lived there. You're still the foreigner. That's just the culture, how it is. Yeah, at least how I perceive it and what I've heard. If you're planning to move to Malaysia, you may want to check out the Penang over Kuala Lumpur. Okay. Yeah, we'll have a look. We'll check the schools there as well. Ponzi Nation, generational wealth. Singapore. Yeah, Singapore is very crypto friendly. So that's good. It's also very startup friendly. I think that's why also a lot of crypto people are in Singapore. But yeah, for me, it's for my taste, it's too expensive. If you've got the choice, then why stay in a place where living expenses are that high? Easy to migrate to Germany? Depends where you're from. If you're from Europe, obviously easy. If you're not, then you need to have a job that pays nicely and then stay for a few years, and then you also get the citizenship. I don't know how many years it currently is. I think it's 5 or so. Then you can get German citizenship, or 8, maybe it's 8 years. And then, yeah, then you're a German EU citizen and can travel within the Schengen area as well, easily. Japan, true on all counts. Have you given up on crypto? No, of course not. I continue to dollar cost average into Bitcoin mainly, right? I can fly here. So yeah, that's my current strategy. I buy Bitcoin because I think Bitcoin will not go anywhere. Bitcoin will still be around in 5 or 10 years. And when that's the overall thesis, when you think that Bitcoin will not go to zero, that it will not be forgotten, then it makes sense to take advantage of those prices if your time horizon is several years. If you're just looking at it in the next week or two, then the current bearish momentum might very likely continue. That's my impression given all the statistics I've made on stuff. Uh, Short term, it doesn't look too bullish, but long term, 2-3 years, I think you can easily double or maybe even triple your money when buying now, which is a great return, right? Where would you get these kinds of returns in 2 or 3 years? But you need to have the conviction that crypto, or at least Bitcoin, will stay around. So you don't even have, given the returns on something as risk off as Bitcoin are so high, you don't even have to play the altcoin game. That was also the reason why after the Bitcoin crash in 2018, Bitcoin was actually the first to recover. So the altcoins, they underperformed in 2019. The Bitcoin dominance still went up in 2019 when the price of Bitcoin went up. Usually you would expect with the inherent leverage that altcoins tend to go up during a recovery, right? They tend to outperform Bitcoin. When it's more risky, when prices go up, then the altcoins should gain more. But this was not the case in 2019 after the crypto winter. And that was simply because people just wanted to buy the thing that was safe, that they could trust over the long term. And I do see something could potentially happen again, even though we haven't yet seen really the altcoin crash yet. So that's also interesting. The altcoins held up relatively well compared to Bitcoin and Ethereum during this crash. So total 3 divided by Bitcoin's market cap or Ethereum's market cap is actually up during this trend. There's another video on that. Thanks for the live share, Gerhard. I'm off to my shift. Are you doing crypto full-time? No, I'm not full-time. I do IT management, which is luckily relatively flexible, but yeah, that's currently still my main occupation. So I'm doing this basically during my lunch break. Do you think crypto will survive a major economic downturn in a major way? Yeah, some crypto will, right? Bitcoin will. And I also think with this recent crash, when we look at on-chain metrics, that actually a lot of money went from institutional investors to the small holders. So when you look at the wallet sizes above 1 Bitcoin, so the smallish wallets, I'm now having a little fly thing here, then you see it went up during the crash. So a lot of Bitcoin now went to the small guys, which then also tends to decrease the correlation to stocks, which is a good thing. So even we get an economic downturn, I don't think, unless people are really having a hard time getting liquidity, like they get unemployed and they don't have enough other savings and they have to sell their Bitcoin, I think Bitcoin will actually survive a crash relatively well. I mean, relatively in terms of it might crash to the same degree as stocks, which is good given its inherent leverage and its ability to long-term outperform stocks. Okay. Is your profession data science? You're very data-driven and big on visualizations. No, so yeah, IT management is my background, or is my job right now. Actually, I've studied business administration for the bachelor and then financial analysis for the master. And I did the financial analysis thing mainly as, for out of interest. I did these kind of back tests already even in high school, so I do this for quite a while. But yeah, my job is rather helping a team coding system integrations and stuff like that, supporting them in that way. Do you think the majority of altcoins will drop out? Do you think people who made things like strong node should be held accountable? Ponzi? I think if we are not going to recover instantly, if we're going to stay at low levels or maybe have another crash, altcoins could crash as well. I mean, further, they could underperform Bitcoin. They are now relatively expensive. So I'm personally not buying the alts right now. I am risk off. Regarding strong node and Ponzi schemes and accountability, yeah, that's a moral question and a question of how much regulation there should probably be, right? I think in general, if you get into crypto and you convert your money into something where you even have to manually add this token in Uniswap and where you go through all those hoops, then you kind of, in the back of your head, you already know that you're exposing yourself to a lot of risk, right? That this is not something that's regulated and that you could lose everything. If people then do lose everything and they get into the Ponzi, then um, yeah, it's a question who's to blame for that. There is obviously part responsibility on the person that did it. There's also part responsibility on the person that advertised it. I think it's problematic when I think the collapse of Strongblock, for example, is less problematic than the collapse of UST and Terra Luna, because Strongblock was, if you just watched, say, 10 YouTube videos, you knew Strongblock was a Ponzi scheme. You didn't even have to do that much research. So that was clear if you did the work. That was very different to the Anchor protocol, where in very big letters on the landing page you saw the USP called better savings. Right? So people use this as a risk-off asset, as a savings account, and they allocate it accordingly. And then I just recently came across an article. Then it only took like 200 million by two traders to break the peg temporarily, to then let people freak out that then this multi-billion industry collapsed. So that's rather the issue. The issue is how it's being advertised, and if the person that gets into this is aware of the risk. Should you allow everybody to take on as much risk, like to take on infinite risk? Yeah, I think people should have the possibility to take on as much risk as they want, as long as they're aware of the risk. So I am not a fan of restricting people taking risky bets, saying, okay, this type of investment should only be for accredited investors. I think this is the wrong approach. I think people should still have all the opportunity they can, should take all the risks they can. And even Ponzi schemes, right? If you learn enough, if you're in the top 10%, then you can benefit from it on the expense of others. But it's fair game, right? You know you're in a Ponzi, I know I'm in a Ponzi. We're just checking out who's actually going to time this correctly. So that's kind of like online poker, right? I play poker, you play poker. Somebody in the end will have the chips. It's either you or me. Then I think that's morally okay. It's a problematic once it's advertised as something it's not, and once people over allocate and lose their life savings. Yeah, that's, I think, the way it should be. It's infuriating to think Do Kwon walked away unscattered with embezzled funds, while numerous exchanges and hedge funds are selling shirts off their backs. Yeah, so agree with that, right? So the whole behavior of Do Kwon in this was obviously also problematic, but also the advertising of the entire system was very problematic. So yeah, I agree with that. Bitcoin is Damocles sword. Yeah, I can't really follow that. But yeah, Bitcoin obviously has an overall strong impact on the rest of crypto. So if Bitcoin goes down, the rest goes down as well. Okay, so I'm done with all my notes on Ponzi's. This was the very first live stream. One last question, so I'm gonna finish those and then I will quit this. So what time are you realistically giving the market to recover? Yeah, I think Bitcoin is likely going to be higher than it is today, at least in 2 or 3 years. I think in 2 or 3 years we will see minimum a 40k Bitcoin. That's my view on many different on-chain metrics. If you want to learn more about this, search for the Glassnode newsletter, insights.glassnode.com. There's a lot of interesting stats over there. And check the long-term check the long-term charts on, for example, look into bitcoin.com, long-term models on where Bitcoin might be going. So yeah, I think buying now and not looking at the price for 2 or 3 years is likely going to be the right move for Bitcoin. Okay, so thanks everybody for watching. Thanks for all these likes as well. Thanks for all the input. It's quite a bit of fun. It's the very first time I do this. Yeah, hope to see you also in the next stream, of course. And thanks for all your support. See you next time. Bye bye.